So you've probably heard of support and resistance, and you've probably seen that perfect setup where everything looks great for price to make a strong bounce from support. So you enter the trade, and now you wait for the money to roll in. But price breaks support, and all you see is red. It doesn't go your way. Show of hands if you've been in that position. You see support and resistance, there's more to it.
So I've been trading the markets for a long time, and support and resistance is still one of the ways that I go about trading the markets. Because if you think support and resistance is basic, nah, son, there's a lot more to it. So I'm going to show you how you could take something very simple like support and resistance that most people can get their heads around in a couple of seconds and turn it into something that's a lot more complex and a lot more useful to trade on. So I'm going to show you 7 laws of support and resistance that I use when I trade the market. Let's start with a time frame. No better place than that, because what you don't want to be is one of these degenerates that trade the 1 minute chart or the 5 minute chart to try and beat the markets. Leave all of that to the algorithms, leave all of that to the machines, because what you want to focus on when it comes to support and resistance trading is simply just 2 time frames. That's the 1 hour time frame and the daily time frame. That's it. Those are the only time frames that you want to be using support and resistance on. Because here's the thing with trading. You want to trade situations that is very obvious to everybody in the market. When you start trying to trade on a 1 minute time frame, a 5 minute time frame, there's only a small percentage of the market that's actually looking at those time frames. But guess what? Everybody's tapped into the 1 hour and the daily. So that's where you get the better quality reactions from the market, because everybody's seeing that, right? So the 1 hour, the 1 day on support and resistance, those are the only time frames you need to be looking at. It's trading the break and retest. So instead of actually trading a support bounce or a resistance rejection, actually waiting for that breakdown of support, let's say, and then looking out for that break and retest situation. So the break and retest is like this. If price goes ahead, breaks support, what it will often do is retrace back up to that previous support level. That support level will then turn into a resistance level, and then you'll get a further rejection to the downside. So in that situation, the market has created this little bull trap, right? That's lured buyers in, but they've just bought into a rejection level, and then you see a sharp decline as everyone's kind of rushing for the door. So it's that type of situation that I love to capitalize on in the markets. How price interacts with support and resistance. Now, let me start off by saying I'm not a major fan of these textbook chart setups. You know them, like the cup and handle, bear flags, bull flags, all these things, right? But in the context of support and resistance, they can actually become quite useful. And the reason why I'm not a massive fan is because they happen all the time in the markets, and only a select few actually yield quality results. But when it comes to support and resistance trading, if I see price interacting with support and resistance in one of these formations, okay, then it can add as an extra layer of confluence to the trading setup. So let me show you what I mean. Let's say price is interacting with resistance. You don't know if price is going to actually break that resistance and go higher, or reject and go to the downside. So if price moves to resistance and forms a double top, now what's happening is you've got that higher level resistance, but then underneath the surface, price is showing some weakness because it's forming the double top. So now you've got a situation where it's more likely price is going to reject, because you've got a lot of buyers, a lot of people in the market seeing that higher level resistance, but then underneath the surface, they're also seeing the double top as well. So you've got that double whammy situation, which can cause price to move to the downside. So how price interacts with support or resistance is also something definitely to take into consideration, and can create winning setups. There's loads of others, right? So let's say price is moving to support, and you see something like a descending triangle, where you get this series of price making, where you get price making a series of lower highs. Well, in that situation, you know that what's happening is momentum is exhausting, because we're not able to make a higher high. So not only have you got that support level, right, you've got that critical support level, but then underneath the surface, price is showing weakness these two together, it's very likely to create a situation where price actually goes ahead and breaks support. Psychological levels. So what's the psychological level? These are these nice round numbers, right? Like $1, $10, $15, $20, $50, $100, $150, these round numbers, these nice numbers. So when you get support and resistance at one of these psychological levels, call it like $100, it can act as a very like sticky level to create, let's say it's at support, to create strong support that holds up, right? So it's very likely if there's $100 support level, there's going to be strength there for a period of time. Now, if that breaks down, that's then going to become very strong resistance. Think about it. If price, let's say, is above $100, everybody wants to be in above 100. But as soon as it goes below 100, psychologically, nobody wants to be in price, because they know that, okay, if it's dropped below 100, it could easily go to 95, it could go to 90. Do you understand? So psychological levels are really powerful. So when you see support and resistance at these nice round numbers like $100, they could be really powerful, versus if it's at something like 95.13. Fake breaks. Fake breaks are super powerful when it comes to support and resistance. So instead of me trading price moving to resistance, for example, and trying to time whether it breaks above resistance or gets rejected, I'll just wait for a fake break situation. So what's a fake break? It's when you see price, for example, breaking through resistance, only to then very shortly after come back down below resistance. So if you think about it, what the market would have done in that situation is created turmoil, right? And turmoil in the markets is one of the best types of situations to trade on, because if price breaks through a resistance level, so many people have got into that expecting it to go further. Okay, they want to be trading the breakout to the upside, because they think, okay, since price has broken resistance, there's a lot more room to the upside. So here's the thing. If price sharply reverses to the downside, breaks back below that previous resistance level, those that bought the breakout are now thinking, shit, what am I going to do? They're like scrambling to the exit, right? Because now that their whole thesis is destroyed. So if everyone's scrambling to the exit, what normally happens is you get a sharp decline to the downside with the trend. So let's say price is in a strong uptrend. I'm not going to trade the same amount of resistance rejections as I would the same amount of support bounces. It doesn't make any sense. The trend is to the upside. I'm going to trade way more support bounces than I would resistance rejections. It's going to increase my probability of success. Same way if price is in a strong downtrend, I'm going to trade way more resistance rejections than I would support bounces, because that's where the overall flow is. That's where the overall momentum is. And I say that's going to increase the probability of success massively. Now I've left one of my favorites to the end, and the last law I have when it comes to trading support and resistance is consistency. So let's say, take any stock out there. Let's say it's AMD. If AMD is at support, but the rest of its peers, Nvidia, Intel, Micron, etc., they're all at resistance, then what you've got here is massive inconsistency, because you've got one of the larger group giving a signal to the market, right, that it's time to move up, for example, but then you got the rest of the market saying it's time to move down. So the market's going to have a difficult time of digesting and understanding that situation, versus if you had consistency across the board, right? So if you had all of these, all the competitors, all the peers given the same signal. So let's say everybody is at a support level. Now you've got a consistent message that's being given and delivered to the market, so you can trade on that, right? That's going to yield a higher probability of success situation. So make sure you guys join over at the Discord. Link is in the video description. It's free to join. Catch you on the next one.